Hello traders, welcome to Ultimate Forex Trading channel. This is my first video on this YouTube channel and I'm so glad to welcome you. So subscribe to my channel, turn on your notifications so that whenever I upload a new video, you'll be the first person to watch the video. So today I'm going to take you through how to learn Forex trading in 10 simple ways. Number 1. Know the market and commit to learn everything. We cannot overstate the importance of educating yourself on the forex market. It's an investment in time that could save you a good amount of money. And do not make the mistake of thinking that forex trading is like gambling. If you really want to succeed in forex market, you need to take forex education as an essential part of your growth, and you need to commit your time into learning the market, and also you have to follow the process of learning. And don't be too greedy to think that forex is like gambling, that you can turn $100 into $10,000 in a day. Yes, I can guarantee you can become a millionaire in forex, but it takes time of growth and learning for you to attain that stage. Number 2, learn how to analyze the market. By learning how to analyze the market, you will be able to enhance your risk management and improve your chance of making handsome profits. You will also learn what opportunities are worth getting involved in and the ones that are not worth getting involved in. Without learning how to analyze the market, you will not be able to spot some opportunities in the market. And analyzing the market can be in two ways. You can choose to analyze the market fundamentally, or you can choose to analyze the market technically. By using fundamental analysis is trading the forex market based on news, and either political news, economic news, and a lot of other news that we have in the world today that affect the forex market. While technical analysis, you use the chart or some indicators that can help you to analyze the market. If you are with me on this channel, you're going to learn more about technical analysis and fundamental analysis. Number 3, make a plan and stick to it. Creating a trading plan is an essential component of successful trading. It should include your risk tolerance level, profit goals, methodology, and evaluation criteria. Once you have a plan in place, make sure each trade you consider fall within your plan parameter. It is one thing to make a plan, and it is another thing to stick to the plan. So whatsoever your plan is, make sure it is well defined, make sure the plan is simple, and make sure that you stick to the plan in whatsoever way. Number 3, put your trading plan to the test in real market condition. Make sure you use demo account to test your plan. You will get a chance to see what it's like to trade currency pairs while taking your trading plan for a test drive without risking any of your own capital. So if you want to practice your trading plan, do not use your real account, or else you will end up blowing the account. But use demo account. Once you've mastered your trading plan on the demo account, then you can now move to open real account and trade your real money. Number 5, learn forex trading style. Wow. So now after you've made your plan, you've stick to the plan and you've practiced the plan, you've known how to analyze the market. Now is the time for you to devise your unique trading style. There are some things that you put them in your trading plan. Maybe they are not working well for you, and there are things that are working well for you, and there are things that you need to introduce them. Now is the time for you to evaluate your trading plan and come out with a unique trading style that suits your personality. These steps take long time, and it never really ends. Yes, you can keep modifying your trading plan at any time because the market is dynamic and it can change at any time, and you need to be flexible and dynamic also. So learning how to handle your trading style, it really never ends. It's a continuous process, and at this stage you will determine if you want to be a day trader, a swing trader, a scalper, or a position trader, according to your trading plan that you've tested, according to your risk tolerance, according to your patience, you can be able to devise which type of trader you want to be. If you are that type of trader that cannot be able to wait for one day uh, for you to close a trade, if you're that type of trader that something is triggering you to close your trade once it is in profit, you can consider being a scalper because you lack the patience to allow your trade to trade for a longer time. Number 6, know your limit. Number 6, know your limit. This is simple yet critical to your future success. Know your limit. This includes how much you are willing to risk on each trade, setting your leverage ratio in accordance with your needs, and never risking more than you can afford to lose. You should be able to know how much you're risking before you enter the trade, and you should be able to know how much is your profit objective before you even enter the trade. And also on the leverage part, you should know that leverage is just like a loan that you take from broker to open a large position with a small capital. So the higher your leverage, the higher is your risk. So if you're going for a high leverage, know that your risk is very high. And if your leverage is low, your risk also is low. And never risk more than you can afford to lose, or else you will end up in a depression which will lead to blowing your account and it will lead to emotional imbalance. Number 7, devise a risk management strategy. Risk management is very crucial in trading. It is basically a set of rules you apply to yourself to minimize the effect of losses. Know how to use stop and limit order, stop loss, trailing stops. Being sincere with the affirmation will help you grow tremendously. You need to know how to use all these stop loss, stop limit order, trailing stops, and also one important thing in risk management is that you have to be consistent with your risk management. You cannot be trailing your stop today, then tomorrow you are aware of scaling out of trade is by partial, then the next day is closing the trade completely, or the next day is trailing your stop to break even, and all sort of that. Your risk management parameters have to be defined and you have to be consistent with it. Such will help your growth so that you will not always be blaming the process. You will not always be blaming the methodology. Let's say for instance, you are trailing your stock to scale out of trade. Then on a one fateful day, you trail your stop and the market hit your stock before moving in your direction. You'll be like, oh wow, had it been I didn't trail my stop, I would have been in this trade now. Then the next day you refuse to trail your stop because of what happened the other day, and the market comes back to hit you in a loss. And you'll be like, oh, had it been I trail my stop into profit, I would have had I would have had small profit by now. You are inconsistent, and such cannot be of help to you as a forex trader. Number 8, always check your emotion. Always accept your loss and wait for another trade that suits your plan. Don't try to save your losing trade by entering premature trade. Revenge trading rarely ends well. Don't let emotion get in the way of your plan for successful trading. When you have a losing trade, don't go all in to try to make it back in one shot. It's smarter to stick with your plan and make the loss back a little at a time than to suddenly find yourself with two crippling losses. This happens with me when I was starting out as a beginner. Whenever I had a losing trade, I would try to save that losing trade for that day, and I would try to enter more trades so that I'll be able to recover it. And I found out that I will always lose the remaining trade and end up in deep losses. Such didn't help me, and I have to adjust that whenever I take a loss, I'll take a break and wait for setup to present itself before I'll take it again. Such will help you to grow tremendously in this market. Number 9, keep it slow and steady. One key to trading is consistency. All traders have lost money, but if you maintain a positive edge, you have a better chance of coming out on top. Educating yourself and creating a trading plan is good, but the real test is sticking to that plan through patience and discipline. It is one thing to set a trading plan, and it is another thing to stick to the trading plan. No matter what the trading plan is, make sure you stick to the trading plan. Make sure you are patient to wait for trades to present itself, and make sure you're disciplined not to take unnecessary trade, and your growth be slow and steady in everything. Don't rush in forex, because rushing can lead you to a failure as a forex trader. You have to be slow in everything you're doing, and you have to be consistent, you have to be patient, and you have to be disciplined. Such will help you to grow in your trading career. Number 10, choose the right trading partner for you. It is critical to choose the right trading partner as you engage the forex market. Pricing, execution, and the quality of customer service can also make a difference in your trading experience. When choosing a partner, there are trading partner, like just for instance a broker. There are some things that you have to put into consideration. If you follow me on this channel, I'm going to release a video on how to choose a reliable and user-friendly broker. So guys, these are the 10 things that can help you to grow as a beginner in forex market. Thank you for watching the video. Subscribe to my channel, turn on your notification so that whenever I release video, you'll be the first person to watch it. And don't forget to click the thumbs up button. Thank you guys. See you next time.